Hey there folks, this is Diederik from Cardon & Company from the heart of Amsterdam. This is me, and today we're going to be talking about the company forms in the Netherlands that are up for grabs if you relocate here and set up as a contractor or entrepreneur or self-employed person. The BV and the 30% ruling. When you come to Holland, you must pick a company type. You cannot work self-employed without a company. Any pre-existing company forms from other countries are not usable in the Netherlands. Only in theory. In practice, there are a lot of drawbacks from using it. You will become a tax subject in the Netherlands. It's not renowned for its low tax rate, so it's up to you to find a way to make the Dutch tax situation as attractive as possible for you. So the ZZP and the BV plus 30% ruling are your main two options for this. When working self-employed in the Netherlands, you must also look into your visa situation. If you're non-EU, you need to look into getting a work permit. ZZP eenmanszaak is the basic Dutch starter company. In Dutch, it means one-man venture. Basic accounting requirements, VAT and income tax. No corporate income tax, no annual accounts. Simple identification procedure at the Dutch Chamber of Commerce. It has no limitation of liability. It is not divided into shares and has no capital separate from the business owner. The main rules for the ZZP company form are that are mainly tax-driven. Aggregated income tax deductions up to 20% per year may apply if you meet the requirements. Have 2+ clients, don't have more than 70% revenues from one single client. Your work does not resemble the work of regular employees who are doing the same work as you in the client's company. You certainly should not be leading or directing other employees, and you must keep your freedom in how to perform your work and what times and from where. If you don't meet these requirements, strictly speaking, the tax breaks do not apply and the ZZP becomes ineffective. The BV company form is the main Dutch company form, can vary from one-person setups to multinational corporate structures. It is a workhorse of the Dutch economy, so to speak. Full Dutch accounting requirements, VAT, CIT, payroll and annual accounts. It has limited liability, is divided into shares, and it requires a civil law notary to perform the incorporation and the subsequent registration at the Chamber of Commerce. Tax basics for the BV, it's more tax efficient than a ZZP company form from 120,000 per year in profits and onwards. It has a minimum annual DGA salary of 56,000 euros. This means that you must pay that salary before you can start looking into disbursing dividends or saving up cash. The big exception applying is the 30% ruling, which may be obtainable for you if you are an incoming expat. 30% ruling means you have 30% of your income tax-free for 5 years. Drops 25% to 27% from 27 onwards. Available to company employees, including BV directors. So this means it's not available in the ZZP company form because it doesn't have separate legal personality and it's not able to employ you. It can only be obtained once during your migration to the Netherlands. Afterwards, it is not available anymore. The 30% ruling has threshold amounts. The bare minimum to obtain it in 2024 is 46 and some small change. The minimum for full effect of the 30% ruling is about 66,000 euros. These are all annual salary amounts and these are all prorated on a monthly basis. If you enter halfway through the year, it's like 33,000 for the minimum for full effect. The minimum DGA salary will be easily met if you meet the minimum for full effect, so it's not really a topic. You want to be paying out as much salary as you can anyway in this scenario. Factors when comparing, so first off, of course, the expected earnings per year and your post-tax takeaway, but there are also some other topics: the setup costs, the expected liabilities, amount of clients expected, intended future business ventures, family members, kids, and your driver's license, which many people tend to forget. The ground rules are, first off, your earnings, your net company revenues from clients after deducting your costs, because you're going to be having costs. Costs include business lunches, travels, laptop costs, accounting costs, and also the company setup costs for the BV plus 30% ruling scenario. In the BV, earnings can be paid out or retained. In the ZZP, earnings are per definition paid out and subject to taxation because, again, it does not have any separate legal personality. Comparing earnings in the ZZP and the BV plus 30%, make sure you meet the requirements for either company form before you start comparing them. Make sure you don't equate revenues with profits, account for costs, including setup and migration. And both company types have accounting requirements and costs. BV just a little bit more than ZZP, so just don't forget about that. As a main rule, the BV plus 30 is advisable from 66k per year in earnings and onwards. This amount is prorated. If you drop below 66, but envisage an increase in the future, the BV plus 30 rule may still be advisable. If you are below 66 per year and expect it to stay that way, this ZZP is your go-to company form. Here are some examples. So with the 66k per year in earnings, there's already a pretty big difference between the ZZP and the BV plus 30%. In terms of tax rates, 25.23 and 18.88. That's a significant difference already. If you go to 100K per year, the difference is almost 10%. So that's quite significant in terms of post-tax takeaway. And then you have your limitation of liability in the BV company form, which you don't have in the ZZP company form. So it's a bit of a no-brainer if you ask me. Factors to consider: the costs for the ZZP company form. It's a simple registration and costs €80, but the BV plus 30% requires an upfront investment of a notary to incorporate the business from abroad. So this requires an international notary and a business immigration advisor to handle the 30% ruling application. Please factor these in. The limitation of liability is something people tend to forget, but claims for damages in the line of your work will land on your private doorstep if you go for the ZZP company form. If you go for the BV company form, it will be limited to the BV. Any claims from clients will land on the doorstep of the BV and will not bother you in private. The ZZP requirements are being dressed down. The tax breaks are broken down into separate parts, and separate parts of them are being winded down because it is subject to a lot of abuse of people hiring ZZP people instead of employing them as a regular employee, because that saves them costs. This in turn leads to problems and to a lot of questions in politics. So ZZP requirements and ZZP tax breaks are subject to being wound down, so don't expect things to remain the same. Factor to consider: family, relocation, driver's license. If you set up a Dutch BV company in advance of your migration, all costs incurred as part of that immigration can be expensed in the BV as a business expense. That includes costs for house searching, relocation of household goods, plane tickets for yourself and your joining family members. This is not available in the ZZP company form because you don't have an employment relationship there. If you bring children to the Netherlands and you wish to put them on an expat school, these expat schooling costs can be expensed in your BV if you have a 30% ruling. Again, only available in the BV plus 30% ruling scenario. And last but not least, your foreign driver's license is valid for 6 months in the Netherlands at least, but at some point you're going to need to swap it for a Dutch one. And that includes taking the driver's test. If you have a 30% ruling, you can just swap your foreign driver's license and get a Dutch one for free and save you all that hassle. The 30% ruling transfer, if you set up a Dutch company as a contractor or as a freelancer, which is the same thing, but just to make it sure, the 30% ruling can be obtained and then later taken with you if you transfer to regular employment for a Dutch company. So this is something to consider, and that could be very valuable for you in the future. Other factors applying: corporate income taxes. In the BV plus 30% ruling scenario, this may apply. In the ZZP company form, this doesn't apply. The BV, if it pays out everything as salary to you, then these salary payments are of course costs which are deducted from your revenues. So in the end, your profits will be zero, and your corporate income tax will only apply to your profits. So yes, CIT applies, but you are not being taxed on profits that you don't have. And if you pay everything out as salary, it's just not something that's a topic of discussion. VAT, likewise, not a topic of discussion in any B2B relationship. VAT is 100% neutral. VAT can be paid and reclaimed to the tax authorities. VAT received must be repaid. In a B2B relationship, it's just an administrative topic and it's not a cost. Only within the Netherlands do you charge 21% VAT, and in a cross-border relationship you normally apply 0% VAT. So it's only a cost for you as an end consumer. Conclusion: take your expected revenues, take your costs, subtract the one from the other. Now you have your earnings and compare them. If you're in the twilight zone, like between 60 and 66K per year, think about your if you have expectation of increased earnings in the future, if you have liabilities in the line of your work, if you have a big family coming along so you can expense those costs for relocation, if you have a non-EU driver's license for which you are going to have to perform a driver's license test, in that case without a 30% ruling, if you expect to transfer to regular employment and take your 30% ruling later, or if you want to set up a company, develop assets, develop IP and sell the company later, or attract investors, then you're going to need a BV company form anyway. Take these factors into consideration, think about it. Disclaimers, of course, these numbers are actual for 2024. In 2025 the numbers will change. Calculations are to be understood as approximations. For your exact situation, please consult a tax advisor. There are always exceptions to rules. So if you think you are subject to any exception, then you can reach out to a tax advisor, you can reach out to us. This is just for general consumption, for the general rules only. Bye folks, you can reach out to us, and if you want this slideshow, then click the button.